Good afternoon, everyone. It's Chris from Soul Society R as well as Excel. You can find us on the websites, Twitter, Instagram, as well as Discord, and you can DM us to get more information. We use this adaptive algorithm that's built by traders such as myself for side market, up market, as well as down market. Remember to smash the like button, share with your friends. Let us give us your commentary and let us know what you think. Let's go to the first slide that I have up here. I had put this slide in November, I should say, of 2024, and I said take a look at the S&P sectors, which are 11, the Mega 8, which is the part of the Nasdaq 100 XLK, which is Amazon, Apple, Google, Meta, Microsoft, Netflix, and nvda. And I had mentioned to keep an eye on mid cap, small cap with Schwab, large cap, dividend. And we're going to look at the banking sector as well as software companies. And remember, you can trade all electronically traded funds as well as e-minis and the micros. And you can, if you have more information, you'd like to get more information, let us know. And let's go to the next slide. And this is this week's slide. What I wanted everyone to be aware of is be cautious in large cap growth companies, especially in the tech part of the S&P sector, as well as the Nasdaq. We're going to take it day by day because the volatility has picked up. Change is inevitable. What I mean by it, you have to basically evolve with the market and the trend. Don't be biased to one side. Trend is your friend until it changes. Be patient when you are bullish or even when you are bearish and waiting for setup. Complacency can kill the bulls or the bears on either side if you are biased. So when the volatility picks up, there are always violent moves up and down, and usually there's a recovery afterward. Be flexible. Not being flexible in the market, I want you to be fluid because flexibility breaks in the market. Because if you heat up a piece of steel and you hammer it too hard, you can shape it into a form. But that form sometimes breaks, so you want to be fluid like the water and such as oil. Protect capital at all times because the money you earn and you save it on the sideline, don't put it in a high risk account and end up losing your principal. So always have a stop and don't stay wrong in your position and don't act to a loser. Don't question the move. When there's a setup and things are setting up to move up or move down, instead of being side market, act on it. Don't question the move when it's offered to you. And last but not least, money will come to you. If you have more questions, we use this adaptive algorithm solutions, which is built by traders to get the signals. And you can ask us how it will help you to improve your trading in 2025. Last but not least, this is our website. This is your contact. Give us your commentary. Let us know what you think. And we're here to help. Let's go to the first slide. And what I did, I put the Mega 8, which is Apple, Amazon, Google, Meta, which is my Facebook used to be, Microsoft, Netflix, and nvda, as well as Tesla. I wanted to show from January 2024 till December high, the total return in the market. What we can do is get this line, and that line will basically, I can click on that low here, which we had in the year, to up here, and it kind of gives you an overall view. What I can do, just set it up 2 month out. Let's just go back till 11, okay, everyone. Let's do 11/23. The reason why I want to be able to see that level for you from the January low. Oops, let's take it correctly. January low to this high in December, and I wanted to show the total return. That was 241 day bars. That means every candle represent 1 bar for the day. You had a total return on the combination of those 8 instruments, 70.86%. And if I look at it as of today's date, we are a little bit underwater. We have 68.71% total return on those combinations. What I want to do is zoom in a little bit more closer, and what I want to show everyone here after this consolidation that we had here, we had this push, we came back, retested this breakout, went sideways for about 2 weeks, rallied up, zigzagged in a linear regression downtrend channel, and eventually we broke up. We have had 3 weeks inside candles, volatility going up and down in range bound. If you look between this candle and this candle, there's a tiny little gap between these two because it tested this area. And if I go back to the breakout of this candle, even if I grab this and get a box in here to show everyone that there is a tiny little gap between these areas, and what you can do is expand it to the right side, so that way you have an overall market. In case the market turns down, you have to pay attention to this area in this gap coming down if it's going to find support or not on the combination of those instruments, such as nvda starting to lose some strength. Apple is starting to lose some strength. So what I want to do is show you aapl and nvda. I don't want to talk about anything else. You can see I put these ovals here on Apple as well as this consolidation area, and I wanted that 200 SMA to be tested as well as the 250 because this was the breakout consolidate. We went couple of month range bound. We looked up in Apple, we fell down. We have a couple of little tiny gaps up the top, but this area is no longer valid because we fell below it, but I kept it there because this was the consolidation before the breakup. Come back, retest it, went back up, and you can see that uptrend channel is no longer valid. We are in an island reversal. We do have a gap down here in Apple. I wanted everyone to be aware of it. Pay attention to Apple because the earnings are coming in next week in Apple. We have Exxon, Chevron, Starbucks, and so on. So we have a heavy week in between tech sector and couple of equities as well as Tesla. So let's go take a look at NVDA, and I wanted to show NVDA in relationship to Apple. You can see that the chip manufacturing sector has been range bound since the November as well as October. You can see that range. We've been going back and forth, and I had called down here for a reset, which we got the reset to 100, rallied back up. We have these two tops. I'm afraid of this engulfing candle because it has filled this gap. You can see it. We had this gap up. We had an inside day, then eventually we looked up and failed. If there's going to be continuation, I'm paying attention to the 50 SMA and the 18 and F6 for the 61.8. If it does not hold and we fall all the way back to the 116 and the backside of this consolidation, if it rallies up, that's great, but pay attention. You should not be here long. I am a little bit cautious on large cap tech sector growth. Let's take a look at the micro ES. And the reason why I want to put the micro ES, this is the S&P, or you can use SPY, or you can use ES or SPX. It doesn't matter. What I wanted to show here on this range, because this does not show the growth. You can see that consolidation here. The tests 1, 2, 3, and eventually we broke up from here. We had this little gap which we never filled. We rallied, we came back, retested this area, rallied, we went sideways, we went back down and popped up again. You can see we came out of a wedge to the upside, but on the S&P 500 E-mini, because futures trade almost 24 hours, it's not going to show you much gaps, or the micro NQ. And I wanted to show the micro NQ before I put the other ones up, which is the SPX or SPY. And if I zoom in here, we are in the same situation. You can see that downtrend, we broke up, but we had a Friday a little bit more weakness in the NASDAQ 100. If I put NDX, if I put NDX right here, I wanted to show that the NASDAQ has a couple of gaps that never filled down here. We have another gap here. We have another gap between here and here that never filled. You got to pay attention to these areas in case we fall through these gaps, because how far are we away from the, on the daily, from the 18 SMA? Quite a bit, because if you put a Bollinger Band between the top and bottom band, this is your midpoint, the 18 simple moving average and the 50 SMA. We are away from that area on the daily chart, we have this gap. This area we kind of consolidated. It's a very minor gap there, and there's this one down here. So in the last one, the bottom one is down here. If there's going to be continuation, we're going to pay attention, but I am cautious about the NASDAQ 100 as well as the I'll show you the SPX. In the SPX, I can show you here, I put the last year's, from October lows till the high, we had 48%. We came under, we went zigzagging, we got this gap here. We have another gap here. I'm just going to put them up, extend them to the right, edit the property, extend them till the 26 or 27. And you can see that there's a gap here and there's another one here on this candle. So I am paying attention to these gaps in relationship to the overall market without being biased. We're going to trade what we see, not what we think. And when we came down here, when we were zigzagging back and forth in that linear regression, you can see that this large gap here and this one here was tested a portion of it. On this move down here, we filled that 100% of this gap and rallied higher in the SPX. So we're going to look at the different sectors in the S&P and trade what we see. And I want to show you the small cap and mid, and I'll finish up doing the measure. I'm going to show you the IWM, which is the Russell 2000 ETF. This is the low for the year. This is the high for the year. And you can see that we are range bound in mid cap. In the small cap Russell 2000, or IWN is the value. And if I look at MID mid, this is the mid cap growth. You can see it is at a peak similar to the S&P 500. So I'm looking for a small reset in mid, and I put these gaps here to show you where they are in relationship to this last move that we had in mid. Let's go to micro. ES, and I want to do the measured move for everyone in here. Instead of using the daily, we're going to go to intraday chart. From the intraday chart, I would like to use a 20 or 30 days, and I'm going to use a 6-hour chart or 4-hour chart. It doesn't matter. 4 hours will give you more candles. 6 hours will give you 4 candles in 24 hours. What I wanted to show you is the gray area is the European Asian market, as well as Australia, and the trading hours in the US are usually the dark, which are in a black. So what I want to do, take the high from here to the Monday low. We had a short week this week due to the holidays in the prior weeks because of the inauguration, Martin Luther King, all the holidays we had in the last couple of weeks. This is my measured move for the week. I'm going to edit the property. I can extend it all the way back to the beginning of the month. So I can go back 30 days and I can just put 2. And if I push OK, it's going to take it back to the beginning of the month, where it's going to show me the highs and lows and the extensions to the top as well as the extensions to the bottom, in case we do retrace to the 50 SMA in this large consolidation. And the top extensions are at the same time, to the upside. So I hope this video was very helpful. You have questions, once again, get in contact with us. We're here to help you. Take care. Over and